forex trading, synthetic index trading. I'm going to be teaching you a very nice strategy today on how to trade boom and crash index 300. Now this strategy comprises of two entry signals. We have two kinds of entry signals for this strategy. Also, this strategy is comprised of two indicators with a very unique settings. Now please do us a favor to subscribe to our channel, turn on the notification bell, and hit the thumbs up, the like button, comment whatever you feel like. You need a clear understanding. We'll definitely reply you. Now this indicator, as you can see, there's a spike there. The spike just happened. This is a very good timing for this video. Now what is the strategy? This is the strategy. Now as you can see on our window chart, we have the MACD and the moving average. The moving average is the yellow line, while the MACD line is the green dotted line. Now how do we place our entry on this? Now as you can see here, please pay attention. This strategy is twisted but very profitable. Very profitable. Minimize your risk and improve your chance of winning. It's a spike catching strategy, and it is, if you backtest it by yourself, you will see that this is a money making machine strategy. So please listen and watch this video to the end. Everything I'm going to say is very important. I hope you understand. Now look at this place here. The line crossed the moving average dotted your MACD line crossed below, and you can see the bars of the moving average below the line, closing below the moving average, the MACD line. But you can see at this point they came up, a spike came up, and price closed there, and you can see the next candle closed above the MACD line. When the price closed above the MACD line, you can see its close here was still touching the MACD line, and there's when you place your entry. It serves as a retest. It serves as a retest. That's when you place your entry here. As you can see, we caught that spike. We have caught the spike here. Now that is the first form of entry. Let me make it clearer for you. After they pull down here and there's a spike, you wait for this bar to retest down to either the MACD or the moving average line. After there's a break up, a spike up, and this bar begin to fall down to this MACD line. When it touches the MACD line, you place your entry and you cash the spike. Now I'm going to give you more examples on how to catch the spike. This is the first type of entry. I told you we have two types of entry for this strategy. This is the first type of entry. Now let me buttress more on this first entry. Now let me look for a very nice example to show you. Looking for a very nice example to show you. Yeah, we have one here. As you can see here, price moved down here. There was a spike up. As you can see, the retest here. We have the spike here. We got the spike here. Retest down to this bar here. We caught that spike here down to this place here. When price moved down, we caught that little spike. And you can also see this place here. When the spike happened here, you can see price went above the line. Then you can see price retracing back to the line. As soon as price touches the line, this candle here, like I told you guys, this is a tactical one. As you can see, price touch this here. I hope you are seeing my crossbar line. Touch. You can see spike happened here. can see this one closed above the MACD line. You can see the bar closed above the MACD line. This one hasn't touched the MACD line. As you can see, this one touched the MACD line. As soon as this one touches the MACD line, we place our entry. As you can see, wait for 2-3 candles. As you can see, we have the spike up here. Hope you understand this. I'm still teaching you the first mode of entry. Please watch this video continue and you will understand it. Now let me look for another example. Yeah. You see one here. Let's look for. Oh, wow, wonderful. This is nice. Now let's look for this. I'm going to teach you this. See this, a downtrend. All the bars are below the MACD line. And first we have our spike here. We have our first spike here. This spike is the first spike here. And we have our first spike. We are looking for the first bar to hit the MACD line. And we have it here. We have it here. This line here. This candle here. This candle here. The first to hit the MACD line. This line here first. And you can see after 2, 3, 4 candles, 2, 3 candles, we had the spike here. You can see we have been catching the spike up. As you can see again, when price, like I told you, when price touches the come close to either the MACD line or the moving average line, you take an entry. As you can see here, the MACD was closed. As you can see, we catch this spike, same as this. It touched here. The MACD line touched at this candle. You can see 1, 2, 3, 4. The fourth one, there was a spike. As you can see again here, guys, are you seeing this? You can see again here, the touch here. After it touch here, you wait, allow this candle to close. Then you enter. You can allow this candle. If you allow this candle to close, no problem. Then you enter at the next candle here. We enter the next candle, wait for like 2, 3 candles. You can see the spike happened. Here again, look at it here, guys. It touched here. Wait, as you can see, it touched. We enter here, come to 3, 4, and the fifth candle, there was a spike. As you can see here again, it touched here. As you can see, a spike happened. So guys, I hope you understand this. I hope you understand it. Like, look at this now. It touched here. When price touch here, 1, 2, 3, 4, no spike, you close. Price will not always move in one direction. Price will always change direction. It cannot continue to go down forever. It cannot continue to go up forever. So at a point in time, it will fail. But you know how to manage your risk. You are not losing more than 4 candles. Now look at this again. After this spike here, after this movement up, the first touch to the moving average, you can see the first touch to the moving average. We wait for 2 candles, we catch that spike. That's just it. We come here again. The first touch after 1, 2, 3, 4, no spike, we close. You can see here, price has been down. There was no spike up. Price has been down. You can see this. You can see we had a spike here. We first touch to the candle. You can see here. Wait 1, 2, 3. We catch this spike. Understand? Look at it again. After the spike, we wait for the first touch to the MACD or MACD line or the moving average. As you can see here, it happened here. 1, 2. We catch this spike. Guys, I hope you are seeing this. So that is the first, one of the modes at which we can, catch spikes. We can catch spikes. So that's the first. You wait for the move down. After the move down, you got this. Wait for the retest down to the the moving average or the MACD line to touch, then you place your entry. So that's it for that one. As you can see here, we have the first spike. It came down. This is where it touched. We enter this candle here. We enter this candle 1 2 3. We have the spike. Hope you understand this. This is the first mode of entry. First strategy for entry. Look at this. We have this first spike here. We have this spike here. First touch down here. You enter to the next candle. You see, we catch this spike. That's just it for that. So guys, that's it for that. Hope you backtest, listen to it and backtest. And backtest, you can see the spike up here. Look at the downward move to the moving average, and you see we touched at this candle here, and you can see the spike. Same thing here, touched here, and you can see the spike. Touch here, enter the next candle, you can see the spike. Look at this too, touch here, enter this place. 1 2 3 4. Would have lost this because I cannot reach more than 4 candles. I will always make profit at the end of the day. That is it. I will always make profit at the end of the day, because if I lose 4 candles and catch like 3 spikes at the row, I'm in profit. And you can also ride a trend if you know how to follow. If you know your trend following strategy, you can also ride a trend. So that is it, guys. This is just the strategy. Hope I've shown you this. Like I see this one here, close to the moving average. As you can see the spike. You can see this one here, close to the moving average. You can see the spike. You can also see this one when it price went below here. Retrace back up, and you see when price came down here, you can see because the spike. So that's the first mode of entry on this strategy. Hope you understand. Don't risk more than 1 or 2% or 3% of your account. Don't risk more than that, guys. Don't miss more than that. So that's it. You catch. That's the first. Like I told you, it's 2 kind of entry. That's the first one. I'm going to show you the second one. The second one is gonna wow you. Second one is gonna wow you. So now this is it. For this strategy, we are going to be looking like let me say a curve, a downward curve to the line, to either the MACD line or the moving average line. A downward curve like this right now. I'm expecting a spike to happen here. Let's see if it will happen. I'm expecting a spike to happen. If it doesn't happen, let me place this line here as my entry line. 3-4 candles, there's no spike, I'm closing. Now before that, let's wait for that. Let me continue to teach you. Now, like I said earlier, the curve, we're expecting a curve, like a curve, shape curve down, like an arc down. When it's just like a rainbow, a rainbow kind of structure. When we see it on this thing happening, we place our entry, and the bar is getting closer to the line. We place our entry. If you don't understand, I'm going to show you some example now so you understand what I'm saying. Now this is it. Let me show you some example. As you can see here, this spike happened here. This candle, this bar, I'm talking about the bar now, the MACD bar, moved up above the line, above the MACD line. As you can see, the next candle, the next bar was higher than the previous bar. As you can see, then we look at this bar here, it was lower than this bar, and you can see this bar here, it was lower than this bar, and you can see this bar here, it was lower than this bar. But you see all those bars are above, are very above, highly above the MACD line. But now when you see this bar here, you see how it closed lower to the MACD. When it closed lower to the MACD, you expect what? The next candle you expect what? A spike. As you can see, when it closed here, we have this candle here. This is candle. This is it here. Then we see this one below. This is the candle. We place our entry here before this candle. As soon as this candle is forming, we will do what? We place our entry. Then we wait for 2-3 candles. There's no spike, we close. But you can see here, there's a spike that happened. Let's see if there's no spike. 2-3 candles. This candle's close. I'll be closing this trade. I mean, it didn't work here. But I'm going to be showing you examples of the possible outcome of this strategy. Okay, when this bar closed, we'll forget about this. We'll wait for the next. Okay, that means we'll close our trade there. Didn't happen. But now look at this. This is what I'm talking about. Look at this candle here. These candles, you can see these candles going higher. This one going higher. This one going higher. This one going higher. This one going higher. As you can see, there's a curve. We are expecting price, this candle, to close to close below this candle here. This one to close below this candle. So we are expecting a move up here at this candle. Like I said, this strategy is a tactical one and a very, very careful one. You have to be careful of the strategy. If you don't understand this second entry rules, just follow the first rules. I'm going to show you a clearer example. For example, see this here. I've shown you this. Now look at it. Look at this. We have this spike here. As you can see, this MACD. We have the spike here. You can see this bar was higher than this bar, the previous bar. This one was higher. Then you can see this one lower than this previous bar. When the bar lower than this previous bar, we are expecting a spike after this bar. As you can see, we had this spike. Yeah, that is it. It's as simple as that.